The UK and US foreign exchange. What is its trend over the last few years, and how does it affect you if you're thinking about moving between the countries or in investing in either country? Go check out this video as we talk about the foreign exchange in the US and UK. So one of the things that you need to think about, whether you're moving to the United States or you're moving to the United Kingdom, is currency exchange. So as panel members, we are going to review the currency exchange of where it is currently. So let's just have a look at this chart then, guys. So this is the 5-year average. So I'm just going to take a look at my phone because I want to get the spot rate as of now, so I can be really up to date. So it's $1.37 currently, which we can see from that chart. It's been up and down quite a lot. It's been at the lows of March 2020 and then has gone up. It's come back down again from, I would say, March 2021. So there seems to be an annual trend here, and it's gone down to the low in 2022, January, but it's on the way back up. What's your thoughts on this one, Simon and Genji, before I kind of chip in my comments and thoughts?
That's a well-placed question. I think we should really make it very obvious. There's no independent advice being given here. We're just basically talking about what we can see and maybe some of the patterns within the currency exchange. So generally, you would suggest, if you were to look at this, that sort of the 140s is the resistance line in terms of trading, and a support line might be seen to be at somewhere around 122. And over a period of time, the currency seems to fluctuate between that resistance line and that support line. Can you make money doing this? Yes, it's particularly difficult to time it and get it right. What a lot of people might do is create with an exchange broker a hedge position so that they don't lose against currency fluctuation, but maintain the position they're in. I guess if you were slightly more not as risk averse, but kind of happy to take some risk on currency to make some extra money, maybe you would look at this support and resistance line and suggest that maybe we're above the average at the moment. And historically,
yeah, because we talk about this line here in particular, and potentially, if you look at points, I used to chart this theory for quite some time, and you look at these kind of points and you say, well, where are we against that point? And if you drag it across, we're currently above that point of a safety net. But then you could argue, well, is this a new trend that we're going to be going on forwards? I certainly, and I'm talking about personally, I'm not looking to buy dollars at this point in time, but I certainly will be looking at it again when it goes towards that $1.40 mark for sure.
Yeah, absolutely. And a really interesting statistic there in March 2020, the dollar really, I hadn't fully realized just how much the dollar slipped against the pound as we went into COVID. Is that the Donald Trump effect? I don't know. Dare I say it?
Well, let's not be controversial on this show. But I certainly think that there's lots to take away. I think from Genji, what's your thoughts before I talk about real estate in the UK versus the US and in particular this currency exchange?
Thank you, Simon. I think both Simons, you've summarized the technical aspect of foreign exchange very, very well. Now, obviously, that points out that there is money to be made in foreign currency. Now, in traditional investment, if you use pounds to invest in the American stock market, for example, you would also be exposed to the currency fluctuations. So that is obviously a concern. And what I do want to focus on is, I suppose, a more lighter touch, a personal experience. So I moved here from America in May 2019. Now, if you follow that graph from around May 2019 up to today, right, I have both an American credit card and bank account, and I have UK bank account and credit cards. Now, as we move from May into basically around September 2019, as you can see, the dollar slipped and slipped and slipped. So guess what? I for my daily purchases, and most of my cards as well have 0 foreign transaction fees. I start using my cards, purchasing my cards strategically using the currency that I do have. So when the pound is on the up, I start using my pounds. When the dollar is and vice versa, I start using my dollars. So obviously, back in March 2020, I started using a lot of my dollars. And now, as we basically approach a sign that the pound is going up again, I start using my pounds a bit more. So it really is, again, from a personal perspective, if you have the privilege of having currency from both sides of the pond, then you can actually strategically time your purchases no matter where you live.
Yeah. And I think in terms of buying in real estate property in the UK or indeed the US, the one thing I would always say to people is people will jump at the chance when they think there's a good deal to be made in either the UK or US. But would you agree, guys, that you should be looking at the currency exchange? Because what seems to be a good deal compared to month-on-month average of house prices, you could be shooting yourself in the foot, can't you?
Yeah, of course. But I'll also say for property purchases, it's not an instant transaction, is there? Now you can follow the transaction, and you can see from the graph as well. The fluctuations are essentially daily, and you might want to buy a house today, but it might take you a while for the transaction to actually go through. And it could possibly go further down, it could possibly go further up. So, I mean, my personal opinion would be that, in terms of buying a house, is obviously you can obviously create arbitrage, but if you're looking for a house to actually live, I would say it's irrelevant. Find the time where you are ready to buy, and when you are willing to move, and not trying to time the purchase with the foreign exchange. But what do you guys think, Simon?
Hodgson?
I think it's probably sound advice, Gingy. You can spend a lot of time following the exchange rate and trying to time it. Yeah, find the house you want, and then maybe you can delay your completion if you think there's going to be a good movement in the exchange. But just remember, it can equally go against you, which is why hedging is quite a common thing to do in this particular instance. And generally, property, either side of the pond, I guess the same rules apply. You don't really, property isn't a short-term investment. It's generally a medium to long-term. And over the medium to long-term, those differences and fluctuations start to have less impact on your actual return on investment the longer you hold it. So only if you were looking to do something really sort of short-term would it then perhaps benefit you to look at this. But if you're going to hold for medium to long-term, especially long-term, follow Chenji's advice and go with your heart.
Yeah. I'm going to slightly counter that, and it's good that panel members kind of do have a different opinion on certain things. And the reason I say that, if we look at that $1, so February 2018, whereby it was $1.43, if I had a property that, and I'm only assuming here that I was a property investor that is quite happy to do exchange, you have to be worried about taxes of purchase as well as sale. So don't be stung on this one. But if I was looking at $1.43 and the price of the house was going up, and it was a relative peak in the US, I must admit I'd be tempted to look and say, peak in the UK. I would be tempted. Wouldn't necessarily carry it straight out without due process. Yeah. But I would sell my house in the UK, convert it into dollars, and then try and find it, especially if the house market in the US wasn't as strong as the UK. I'd be looking for deals which I could then hopefully counter or bounce off the right time for the market to correct itself in the US, as in to increase again, whilst benefiting from the currency exchange.
I like it. And I think that really nicely illustrates tolerance to risk. Yeah. Simon, you're happy to take a little bit of extra risk in order to try and maximize your return.
Yeah, so what you guys are saying is I'm totally risky.
Absolutely not. Absolutely not.
In our profession, it's called, your mileage may vary. It depends.
Exactly. So I think that's quite a good review of that. I'm just going to try and stop that share. Perfect. So I can get my mouse back. But I think in terms of currency exchange, one thing that I'm going to drop a link below this video as well is you do have to be careful about foreign exchange, because people that use high street banks Chenji, you and I talk about this all the time, but if you're buying a property in the UK and you're from America or vice versa, if you use the wrong hedge or conversion house, you could be paying a lot more money for that property anyway. Would you agree?
Yeah,
absolutely, Simon. And you people usually the first place to go for currency exchange is the bank, but the banks know that, so they will usually charge you quite a bad rate. And they either give you a bad foreign exchange rate itself, or they can hide it via a commission, via a transaction fee, or whatever they call it. This, again, the area of foreign exchange is very, very open market out there. Just go onto the open market and compare the market and find the best possible rate. And especially for transactions like house purchases, a tiny amount of difference can make a huge nominal value difference.
Yeah, perfect. Thank you guys for that. I do hope that you enjoyed that video, but don't stop there. There are plenty of videos that I think you should be watching, and I've just put a link just below me in terms of the video I think you should be watching right now.